Hey everyone, welcome back to this premium episode of the Timeless Investor show and newsletter. Today I want to talk to you about someone whose story hit me harder than I expected, Li Ka-shing. Most people in the US have never heard of him, but he quietly built one of the most methodical, patient, and powerful real estate empires in modern history. From plastic flowers to ports, from small apartment blocks in Hong Kong to control of infrastructure across 52 countries. And I don't want to just tell you his story. I already did that in the Substack article that we dropped earlier this morning. This episode is about something else. It's about what I actually learned from him, and more importantly, how we are applying those lessons here at my company. Now, you know, I have a company called Lombard Equities Group, which is a real estate investment company, but we have a broader vision for what we're trying to accomplish here underneath the Timeless brand. And in that ethos, we're actually going to launch our first subsidiary kind of infrastructure business to our company, which is going to be the Timeless Laundry Services Company, given that we control so many assets and we're giving away so much revenue to these firms like, I won't say the names of the firms, but we're giving away a lot of revenue to laundry services companies, and we think we can do a better job. And this story about Li Ka-shing and how he built this company really inspired me to take this leap, and I want to talk about the lessons learned and how we're applying it today. So Li Ka-shing started with nothing, literally. He's spoken a lot about growing up in deep, abject poverty. His family were refugees from mainland China. They came to Hong Kong. And like many people in this situation, you know, it's interesting. There's this whole nurture versus nature concept in life. And people who fled mainland China, just like Iranians who fled Iran and live in Los Angeles today, any diaspora, there's a little bit of a self-selection bias going on. And folks that fled communist China to Hong Kong probably were generally a pretty good self-selection crew, right? He came here at a very young age, and he lost his father at 13. He was a refugee. He was on the factory floor before he turned 15. And by 22, he had saved $7,000 and started a plastic flower business. Not glamorous, but he saw a gap. He saw a real gap. And one of the things that really stood out to me in the story about this extraordinary man is that he would study by candlelight at night, but like in the dark, he'd be studying business principles, trying to understand and build his own acumen and understanding, observing what was happening around him. Every moment was a moment in education for him. So inspiring, like such an incredible story. Like how many of us are given so much more to start? How many of us are refugees from another country that are starting with nothing and working on a factory floor? I bet very few. Maybe some of you are. And if so, love to hear your story because you're here and you're a paid subscriber and you're doing well enough that you're trying to imbue these lessons. Like I love those kind of stories. But he saw an opportunity, the plastic flower business. Americans were importing from Japan, and he knew he could produce faster and cheaper in Hong Kong. He didn't love the product, right? I mean, this is like, he's like the ideal example of like, do not follow your passion, follow what works, right? I think follow your passion is some of the worst advice, and we get it all the time. He fell in love with building capital because his goal wasn't about flowers. It was about real estate. And, you know, there's something else incredible. Like Li Ka-shing has written hundreds of shareholder reports. He is the owner of a massive publicly traded business. His shareholder letters have never been translated into English. Never. So I asked our friendly AI friends, plug his letters in and pull it into English and extrapolate the lessons that he has imparted over the course of his incredible career. I mean, the gentleman is in his 90s now, that English speakers just haven't really had exposure to. And here's the things that stood out. Lesson 1, he only bought things they can't make more of. Land, ports, zoning rights, anything with hard constraint. He wasn't chasing innovation, right? He wasn't chasing I'm going to do this thing like on such a crazy wild level better than everyone else is doing it. He was chasing and collecting scarcity, which is very much in alignment with how we've thought about investing over the long term. Lesson 2, he didn't flip, he held. Some of his buildings have literally appreciated over 100,000%, but that was never the play. They produced income and he just waited. Through riots, through downturns, through political chaos, the man held firm on what he was planning to do and didn't let go. Again, very much in alignment with the way we're trying to do things. Now, I will say, I just want to be fair. Not every long-term hold is Hong Kong pre-communist riots and post-communist riots and through the massive growth of Hong Kong, right? There's obviously more to the story than just hold forever, right? Yeah, but you can hold forever in New York City. You'll do really well, by the way. Well, we'll see now with this socialist mayor coming into office, but still, it's probably going to be fine. New York's been through worse, right? So we'll see what happens. But he didn't flip, he held. Lesson 3, he built systems, not a scatter plot. So on paper, and this is really what inspired me for our Timeless Holdings group and everything we're working on. He looks like he's diversified, right? It looks like a diversified portfolio. But what's really happening under the hood is it's a synergistic ecosystem of different things and different businesses that are mutually supportive and control the end product that goes into it. So if you think about what I talked about with launching a laundry services company, like that is a critical input into an effectively run value add vintage apartment complex. Critical. And don't you want to control that? Don't you want to control the property management? Don't you want to control all the subsidiary pieces that flow into running an effective portfolio? And that's what he did. It was controlling not just the assets, but the things that mutually reinforce one another within his portfolio. So the flow of goods, people, power, and capital that moved through his portfolio. Critical. Lesson 4, he studied the rules, not just the markets. I'm going to take this back even further. I mean, this was a ChatGPT generated insight from his writings, right? I think it's fascinating, but I want to take it like a level deeper here. So he studied zoning, permitting, politics. He understood it on a deep level. But here's the key thing. He understood it from a first principles basis because he was doing it. He was doing it. And I've seen this myself in my business. We just took over property management on some of our own buildings. The learning that has happened, the deep intuitive understanding of how you work with residents, what their concerns are, how you solve their problems is on such a higher level. Now, the laundry services concept, by the way, would never have happened except for getting into the weeds here, figuring out what's going on with our laundry equipment in our buildings that we've taken over management on, realizing how poorly serviced they are. We had a unit that didn't have a dryer for a month. No one knew. No one fixed it. No one solved it. I, as an owner, am willing to do the work to take over our own properties. But I look at the contract we have with our laundry services company, and we're giving up 50 cents on every dollar. Plus, we pay a rental fee for the machines. And they're good machines. They don't break that often. It's like a cash flow machine for these guys. But I wouldn't have known that without getting into the first principles. First principles, critical in any business you're in. And Li Ka-shing knew that. He was in it. He was deep in it. He really understood. And lastly, he solved for cash flow, right? He solved for cash flow. He didn't solve for appreciation. He solved for cash flow. And what does that mean as a real estate investor or a business owner or whatever you may be? The deeper I get into this business, right? And we own and manage and control, along with our investors, over $150 million of real estate today. And we're growing. We're acquiring more buildings. We're raising a fund. We're doing all these incredible things. Equity doesn't keep the lights on. Equity, you can go bust on equity. You can go broke doing too many good deals. If you have cash flow, you have staying power. You can survive. You can thrive through any market cycle. Just having equity-rich properties that don't produce cash flow, you can lose that building really quickly. Insurance goes against you. Inflation picks up to a massive high. Like low margin, low cash flow buildings can crush you, even if you have decent equity in the building. Li Ka-shing understood this. He got appreciation over time, but he solved for cash flow. Critical component of this entire ecosystem. So Here's how I am thinking of applying these lessons. And I would encourage everybody listening to think, if you're running a business or you're an operator, like what are the ways you can run it in your own portfolio or in your own business, or just apply it in life more generally, right? The more I studied this and read and tried to understand this man's lessons, the more I realized that and I don't want to overstate the comparison because I'm not a 40 billionaire who's done an incredible amount of stuff. I'm 38, right? We're still very much in the build phase of my life and existence, but I, aspirationally would like to be a tiny fraction of what he's achieved. But we're trying to build almost like the modern version of his same philosophy, right? I'm not chasing paper returns. We're not trying to flip buildings. We're trying to build something permanent, something durable, right? All of this work I'm doing on article production and creating good content for you guys is around building a brand, right? Like a timeless brand that's focused on a few core ideas. Control what's scarce, invest in supply constrained markets, create recurring cash flow, and hold the assets for a very, very long time. And the fifth kind of unique moat is an intellectual content moat that is valuable, that other investors, that my peers and industry peers and people that I look up to and respect really like, appreciate, and admire, and they can buy into the ecosystem we're trying to build. That is timeless holdings. That's what we're trying to build. So again, to go back to this point, in studying Li Ka-shing's model, I realized what he had done was build this durable infrastructure where everything supports everything. And we want to do the same here. And that led to the laundry services business, which we're getting into because, and I've already talked about this extensively, so I won't belabor the point, but like, if you look at his model, he didn't just own his buildings. He owned the utilities that fed the buildings, and he owned the communications infrastructure and the retail tenants. Everything that powered, supplied, or monetized his real estate, he brought it in-house. Laundry is just the start for us. There's a lot of different ways to do this, to control the input means of production to affect the actual outcome. There's a really interesting side note story I'll share with you guys that, again, you're not going to, it's the kind of stuff, that like, this is why you're a premium subscriber. I knew a major family office in Mexico that built massive developments, right? Huge. And Latin American real estate is really interesting because they don't build to rent, they build to sell. But their model was fascinating. They owned some of the most, I won't say the city and everything because I don't want to dial this in too much and have people realize what I'm talking about, but they owned the most premium land in one of the highest net worth cities and zip codes in Latin America. And they were building like a Ritz-Carlton, condos, like all this stuff that was going to go into this space, really high-end retail, like incredible stuff. But that wasn't their main business. It was a really interesting story. That was not their main business. They would build it and sell it. Good for them. But they owned the utility provider. They owned the water company. They owned the utilities that supplied it. So they built it, they sold it, and then they made hundreds of millions per year selling services to the thing they just built. That was their cash flow play. They are worth, I don't know, $30 to $50 billion. Massive Latin American family office. Really, really, really cool. Really interesting. Huge example of Li Ka-shing's model in action. Again, from another multi-billion-dollar family office. Really interesting. So what does all this mean like for our investors? Most investors want scale and speed. We want control and time. We don't want 50 deals a year. We want 3 to 4 great ones. And that's why we're focusing on cash flow today with the potential for appreciation tomorrow, ones we can hold for a very long time and control the infrastructure, services, and vertical integration that goes into managing those buildings. That is Li Ka-shing's model. I am fired up and really excited about what he's doing. That is what we are going to execute on at Timeless Holdings. And if you're part of this ecosystem, if you're an investor, a future partner, or just someone who thinks differently about wealth, I hope this gives you a window into what we're building, ideas for your own life, your own business, your own journey. It's not fast, it's not flashy, but it works. Thank you so much for being part of the Timeless Investor Premium community. If you haven't read it yet, go check out the full profile piece on Li Ka-shing on Substack. I will say, I think it's one of the most interesting and influential investor profiles I've worked on and looked into, and I'm really inspired by him. And if this approach resonates with you, please reach out. slow, durable, vertically integrated wealth, this is something we'd love to talk to you about. Until next time, stay patient, stay focused, stay timeless. Thank you. Have a great day. Talk to you soon.